Robin Cross is on the line. He's with StoneX in Chicago. He's our lumber contributor each and every week at this time. And Robin, the lumber market, I think last time we spoke was almost making new highs once again, but it seems like we backed off a little bit. Where are we today?
Marlon, this thing is all over the place. Good morning. Thank you for having me. Happy St. Patrick's Day. Let's get into it. Prices this morning, you got May trading at $11.77 even. That's up $27 with 42 trades. Not bad volume for the first couple minutes here. July is sitting at $10.15, up 21 with 7 trades over there, so pretty slow. You know, you still got this post-expiration kind of wait and see. So we had a little breaking news this morning. Housing starts and permits came out. Housing starts came out up 6.8% at almost 1.8 million. If you recall, that number is pretty close to our prior to the housing disaster of 08 high, so we're getting back into those real lofty numbers. The consensus on starts was up about 3.8%, so that was pretty right on the mark, I would say. Building permits, that's the gauge of future business, came out down 1.9% at 1.859 million. You know, to me, the housing numbers make total sense. We had good business, decent weather. You know, the market was a little more affordable, so it totally made sense to see these starts up. Permits, I think it totally makes sense there. And how often have you ever heard me say that? Usually the numbers are way off base. But in this case, with the price being so high, interest rates going up, you have a lot of different factors where guys are, you know, kind of, you know, waiting and seeing and not jumping in with both feet at the moment. And then like I mentioned, we had March expiration yesterday, so we'll go through the prices. So March expired at $14.20. That was up $10. And in my almost 26 years, that was the very first time ever of expiration that we didn't have a single trade. So it actually settled on the offer. The previous day was trading at $14.10. So the rule states by the Merc that it settles on the best offer. So that's how we got that settlement. And I wanted to recap the prior expiration so guys could know the massive volatility we've been seeing in lumber. So March went off at $14.20, Jan went off at $1,237, Nov went off at $536, and September went up at $454. What a deal that is versus, you know, that's $100,000 off from today's price just a couple months ago. So, you know, that really gives you a gauge on kind of how crazy the prices have been from month to month, right? So the new ranges, you know, as I've been talking about it the last couple of weeks, has really been having, you know, major havoc on our lumber prices, right? So just to refresh everybody's memory, the new daily range is $57 and expanded limits, which, you know, as soon as we raise those ranges, we already saw 4 limit moves with the new ranges. So to say that it won't get there is pretty crazy. You know, it's sitting at $86. So with March going off at $14.20, the now lead May is trading, you know, $1,200. Well, today it's $1,160. So it's already over a $200 discount to underlying cash. So that's, you know, that's $22,000 difference in price in just one day. And what I like to tell you about, we left a gap from expiration. So, you know, you go by the low of the day of expiration versus the high of the start of the new contract. So that gap was 1201 to 1348. So that's a massive gap, historically speaking, in lumber. So just on the surface, we should take a run at that gap just to kind of fill back in, you know, back and fill some of these prices, right? And if you're looking at July for summer needs, you're at almost a record-setting $400 discount back there. But having said all that, Marlon, the word of the day is still caution. With margins being over $10,000 of one lot in lumber and $114 and $172 possible daily range, you almost literally have to wait for the market to make a mistake up or down before you operate.
Man, oh man, that's crazy.
With that high volatility, options are probably the thing that make the most sense in there because you at least know what you're spending up front, right? We know good, bad, or indifferent what our risk is. You know, when you come in here and you have $86 range, who knows what it's going to be every day? And then if you still want to, like, participate lightly, spreads are also a good way. You got some very good record-setting opportunities to take advantage of, but like I said, no one's really looking at it. And then we'll just go over cash news real quick. So the last 4 cash prints, which is unusual, were a flat 1,400. So it's kind of been stuck there, and obviously because of the geopolitical mess out there, you know, guys are really, really being defensive. So it makes sense.
Well,
but at
Robin,
these big discounts in the board, it makes sense to cover your future needs.
We're going to have to leave it there for this week, but we'll have to pick it up next week. And there's just too much to cover here nowadays with everything going on. Man, of course, we got the rail strike and everything too yet. I haven't even touched on that. So, Robin, thanks for the information, and we'll catch you next week. We'll take a look at livestock right after this.